Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.
Growth is good. This is Paul Harris for Kitco Mining at the 2024 Gold Forum Americas in Colorado Springs. Joining me today to discuss this is Darren Hall, President and CEO of Calibre Mining. Darren, welcome to Kitco.
Yeah, thanks, Paul. Appreciate you taking the time.
Now, Calibre has been one of the most exciting junior gold companies since it was created in 2019. You've done a number of transactions and you've grown your production to over 200,000 ounces a year with a lot more to come. And with the Valentine build you're undertaking in Newfoundland in Canada, nearing its construction, you're on a pathway to about 500,000 ounces a year. You hosted me at the project just prior to these events at the start of the month on an analyst site visit, and I must say it was very impressive. Growing at a time when many other companies are shying away from it, why do you think now is the time to be executing a growth strategy?
Well, I'm not sure there's ever a perfect time to. It's really about, what are we about, right? Our stated vision is to create shareholder value, and we'll do that through growing into a quality mid-tier producer. So if there's a accretive deal that can be done that adds shareholder value, then we will. And then we're measuring shareholder value not by market capitalization, but by share price. And with the production base we've developed in Nicaragua, we believe that we weren't fairly valued for that because of the perceptions in and around a single asset risk, if you look at it that way, from Nicaragua, and diversifying that production into a quality asset in Valentine, in a great jurisdiction, Newfoundland, significantly changes the context of the organisation. So I think that's the opportunity. It's not about is there a good time or a bad time. I think you've got to see is there an opportunity that creates shareholder value.
I think whether consciously or not, you're following a playbook that's been very successful for another big name in the space, and that is B2Gold. They started with the assets in Nicaragua that you currently own and operate, and they leveraged that into acquiring other things at other companies, other deposits, at a time when the market was skeptical of M&A transactions, and now they're a 1 million ounce a year producer. Is that going to be Calibre's path? No,
when you look back and you look at, there are a lot of similarities in. I don't think it's necessarily by design. It's we saw as an explorer in Nicaragua, we saw the opportunity for some organic growth from those assets in Nicaragua, and partnering with Clive and the team at B2Gold to acquire those assets. And our 110% focus allowed it to be able to kind of rebirth them, as it were. And B2Gold participated in that growth, and I think have benefited from it.
Now, the market seems to be responding to the Calibre story. Your stock is at or near a 52-week high. What do you think are some of the key things that have enabled you to execute your strategy so successfully?
Well, I think there were two different questions in there. One of them is, what do we do to execute? And that's, we keep things real. Right? We surround ourselves with good people. We put together a great team of people, whether it be at the board level or management. We continue to look for opportunities to upgrade the quality of our executive management team, as we did just recently with the appointment of Daniela Dimitrov as SVP and CFO. And create an environment that allows us to realise the full potential of the asset by getting those good people together and consciously challenging each other and ourselves every day on better ways to do business. And we've seen that in Nicaragua. Great opportunity obviously coming in with Valentine. Again, a good asset that was undervalued as a consequence of where the precursor company was situated. So I think it's just been opportunistic and being agile, and that comes from maintaining balance sheet strength. We've seen production growth in Nicaragua, we've seen reserve growth across all of our assets, and importantly, as a part of building all those mines, we've also put cash onto the balance sheet, which allowed us to do the Valentine transaction.
Now, let's talk a little bit about that and capital allocation. The gold price is at around $2,600 an ounce. It's gone up $500 or $600 so far this year. How does that additional cash come into your sort of capital allocation priorities? Obviously, you're finishing a build now. I would imagine there's going to be more to come in the future. What does having that extra cash that you perhaps didn't plan for or budget for, what does that enable you to do?
Probably relax a little bit more. And I don't mean that from a pushing the business perspective, but does it change our strategy? No, it doesn't. I mean, since becoming, we've always been an explorer, but since becoming a producer, we've been absolutely focused on exploration. Exploration is key to providing future for our business. And our stated objective is, at this time, is to probably spend around $100 an ounce, production ounce, in exploration. We'll continue to do that. We'll continue to fund our organic growth opportunities that exist in both Nicaragua and Nevada. And now with the development opportunity and completing the build here into Q2 for Valentine, we'll continue to fund those. We were always in a good balance sheet perspective. This just strengthens the balance sheet. So it allows us to maybe make some decisions for some optionality that maybe we wouldn't have done before, but it doesn't change our overall strategy. It really doesn't. It just provides that added level of liquidity. And then if, again, we're not focused on M&A, but if there was an opportunity that presented itself and because of the metal price, because of our balance sheet strength, that we're able to accretively add something in an agile way without blowing ourselves up, then it provides us some additional support. It doesn't change the strategy.
Now, with your exploration, you've had a great deal of success discovering your ounces in Nicaragua. You're building Valentine. You see, you've got quite a land package there. What's the exploration upside there?
Yeah, well, that's a good question, right? You saw a little bit of it last week or the week before when we visited. We've had great success in Nicaragua. We've had great success in Nevada. The value opportunity that sits with Valentine is significant for us as a company in what was known within the feasibility study. But as we continue to understand better that jurisdiction, the exploration potential is huge. It really, really is. It's a greenfield site. It's not a brownfield site. There's been no mining in that central Newfoundland ever in the space. So, the potential we see is huge. And, as we go through the journey of how that property's evolved, from what was originally submitted by Marathon Gold in 2019 was a 2-pit mine plan with Leprechaun and Marathon coming in place, which covers about 6 kilometres of the 32-kilometre shear zone that we see as hugely prospective. As they started to develop that, they infill drilled for geotechnical purposes for facility siting and discovered 1 million ounces sitting between those 2 pits. So, because of the lack of visibility, the coverage of till we see, the exploration potential there is outstanding. And we've demonstrated that by the prospecting work we've done, the early results, and we recently in July increased our exploration program by an additional 100 kilometres commencing in July. So diamond drilling.
Let's talk a little bit about Nevada. You have the Pan Mine there, you have the Gold Rock development stage asset there. I think it would be fair to say that in a lot of conversations, your Nevada assets tend to be overlooked or forgotten because the conversations tend to focus on Nicaragua and now Valentine in Newfoundland. What's the plan for Nevada? Is that in danger of perhaps becoming, as you grow, becoming the smaller asset that perhaps doesn't necessarily fit well?
Yeah, again, we love all our children, right? Is the way I look at it. And Nicaragua and Valentine are obviously very much in focus. We see great opportunity because of the land position we have in Nevada. We've seen year-on-year reserve and resource growth in Nevada. So it's been sneakily in the background there, developing a presence. We see huge exploration opportunity there as well. So it's kind of a bit of a I don't know, what do you call it? Like not the Trojan horse, but like something sleeping there in the background. So no, I think there's great opportunity there. And we've got a management team in place that manages that asset. So the whole discussion about core, non-core, it becomes irrelevant, right? It's important to us. But if it was more important to someone else and someone else wanted to come in and was going to pay a premium and it resulted in creating shareholder value for us, then we'd look at doing something with it. But right now we see a good path to significant resource growth in Nevada.
Now, you mentioned about the possibility of looking at other assets. Your share price is riding high. There are many development stage juniors out there that are undercapitalized and perhaps don't have the management teams that want to build them. Do you see that as a really good opportunity, a healthy opportunity for Calibre at this time?
Yeah, I think for the industry as a whole, I think there's some opportunities that could present different companies an opportunity, those for different stages, whether it's from a balance sheet perspective. For us specifically, anything that gets in the way of delivering value from Nicaragua and Newfoundland is a distraction to and potentially creates erosion in shareholder value. So, we will be open to entertaining, but not at the expense of delivering into those expectations. I mean, the re-rate opportunity that exists with Calibre is significant. We've seen some of that during the course of the last 12 or 18 months. But I think with the addition of Valentine, what we're seeing now in the recent share performance is that people are starting to recognise the value that comes from Nicaragua. Not fully, but they're starting to. I think there's another inflection point as they continue that, and importantly, as people have understand that we will deliver into production out of Valentine here in Q2. So, well, I think we've still got a lot of organic growth to see from a share price perspective. So, yeah, opportunities, yeah, but we don't want it to be a distraction to what's currently on our plate.
Do you think there's a situation or circumstance that, a lot of people have viewed Nicaragua as a jurisdiction with risk and haven't really warmed to it? Now that you have production in the United States and very soon in Canada to offset that risk, do you think you'll get better value appreciation for what you have in Nicaragua?
Yeah, absolutely. I think we're starting to see that now. Again, we can talk about jurisdictional risk, and whether you're in Western Australia or Ontario or Newfoundland or Nevada, there's always a level of exposure. And anything you can do to diversify that production risk into other jurisdictions is a positive thing. We've demonstrated it's 5 years. When you think back, right, we closed the transaction with B2 Gold on October 15th. What is it today? September, whatever it is. We're less than a month away from a 5-year anniversary. We've seen 30% compounded annual production growth out of Nicaragua. We replaced reserves, we've generated cash, which allowed us to do these transformative transactions like Valentine. So, I think nothing substantiates and validates a jurisdiction's like performance, and we've demonstrated that quarter on quarter, year on year. So, I think people are starting to understand that. If there's an ideological disposition to not want to, then you're never going to change that. But I think nothing changes perception like delivery and confidence, and that's what we've been able to demonstrate.
Now, when you look at potential expansion and acquisition of other assets, some people would argue having too many assets divides management time, dilutes it, and that creates issues. The same if you're present in too many jurisdictions. What is your view on that kind of thing?
Yeah, no, I think it's something we need to be cognizant of, but I think importantly is that what you need to establish what your business model is. And what I say by that is, what's your management systems? And what we've been focused on, and that comes from my background at Newmont, right? I spent 30 years with Newmont before joining this family of companies in 2015, is that process can be a very good thing so long as it's working for you and you're not working for it. A big part of that is to establish how you want to run the business and then put in place teams of people who can deliver in and be responsible for P&L in each of the jurisdictions. And that's what we've done. We've done it in Nicaragua, we've done it in Nevada, and we're well advanced in Newfoundland to establish that. So the opportunity to bolt other pieces on is clearly an opportunity for us because we've got such talented teams managing the business. We provide a level of oversight from a corporate perspective, but the whole idea is not to be centrally controlled. It's to be regionally managed with an oversight from corporate and maintain a reasonable level of G&A cost per ounce as well. I mean, arguably our G&A peer average is probably around, closer to $150 an ounce. Our numbers right now are between $50 and $75 an ounce. So we try and keep a cap on that, maintain a lean structure and be effective in the space and push those costs as close to the pointy end as we can.
Now, we're obviously at the Gold Forum Americas here. You were at the Precious Metals Summit last week. I imagine you had a number of corporate meetings as well. Given your success, I imagine everybody is trying to throw their project at you and say, hey, what about this? As a mine builder, I imagine you have a very different view on project economics, gold price assumptions, buildability, etc., than a lot of people that are just really promoting projects.
Sure. No, absolutely. There's nothing that can usurp experience, right? And there's a number of groups out there that do a very good job in this space. We like to believe that we can compete with those opportunities. But I think really what it is it's if you're going to get involved in anything, is fully understand what you are getting involved in, ensure there's an adequate level of engineering to be able to support the cost, so you can appropriately understand what it's going to cost to deliver, what are the challenges associated with the build, so you can deliver into expectations. And I think that's where we've seen what differentiates those that can from those that maybe shouldn't be doing this, right? And arguably, they present for those that don't. It provides opportunity for companies like what we've been able to do at Valentine. But I think harmfully, I think the industry could benefit from a little bit more diligence in that space, because it doesn't do anything positively for the industry for people not to perform into. Even though it provides us opportunities, I don't think it necessarily positions us well as an industry. I think that's what some leads into the disconnect between the equities and the commodities.
Darren, what do you want Calibre to look like in 3 to 5 years' time? Where do you want the company to be?
Well, that's a good question. From a vision perspective, we know what we want to do. We want to create quality and look into a mid-tier. How do you define a mid-tier? Well, again, everyone has a little different perception. What we want to be measured by is share price performance, right? So we've seen from a 60-cent share in the summer of 2019 when we started this journey to where we're at today. We've provided solid returns to our shareholders. I'd like to continue that profile. I'd like to see us in that 3 to 4 year period being $5-6 stock. And I think that with what the assets we have and the trajectory we have, without any further, let's say, accretive M&A, I think we're well on that path. So that's why I would measure it by. If we could double share price in the next 24 months, I think that would be a great place to be. Okay.
Now, as the gold price moves higher, it does seem that a number of corporates are getting permission, if you like, from their shareholders and boards to deploy capital in growth. So do you see the M&A space becoming more competitive, as and when and if you look to bid for another asset? Do you expect to encounter greater competition there?
Yeah. I would imagine that, okay, the short answer would be yes. I think there will be more activity in the space. But I think what I'd caution everybody is that necessarily, higher metal prices don't make for more intelligent decisions. And I think that you've got to take a long-term view on any transaction you make to say, is it durable at what you believe the metal price is going to be in a period of time? And I would rather take a conservative view on metal price with respect to acquisitions and investment decisions and be able to then bank the upside when it comes in rather than require the higher metal price to support the decision. And again, I've used an expression before, and I think we've talked about it, is that if you torture the asset long enough, it'll confess the answer you want. And then if you then commit, well, then the problem is you'll never deliver into that expectation. So I think you've always got to leave a little bit of salt on the table.
Okay, now let's look ahead. The next sort of 6 months or so, what are the key milestones for Calibre?
Yeah, clearly is delivering production out of Valentine. That will be a significant inflection point. And as we increase people's level of confidence in terms of how we progress to that, I think we'll start to see, it won't be a juxtaposition, I think we'll start to see that kick, and we're starting to see it now. Valentine's on a great path. We fully anticipate to be substantively mechanically complete by December, or in December of this year. The tailings facility that you saw a week or two ago is now complete. It can now receive water and solution. So we're in a good position there. So, we start dry commissioning, wet commissioning in January. We're well positioned to be able to produce gold in Q2 of 2025.
Excellent. Well, I look forward to reading about that. Happy 5th birthday for next month. Darren Hall, thank you very much for joining us today.
Thanks, Paul. Appreciate your time.
And we have more to come from the 2024 Gold Forum Americas, so hit that subscribe button to see all our interviews. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.